Just making sure. All right. So now how do I, here we go. For anybody who's having an issue with listening in the room, I just started a private YouTube for any of you guys having problems. If you guys are having sound issues, that's the link, and you guys could join me on YouTube as well. Oh, AOI, $30. No, do not go without me. Do not go without me, please. Oh, Cookie's being paid. This guy. I love it. No, that's great. I'm glad you bought it last week. This break over the 50-day was very nice. And obviously, I should have rebought some back yesterday, or I should have bought some back on Friday. You know, that's my own fault. I'm not too disappointed about, having lost money on it. I'm a little disappointed that I didn't rebuy it back. But whatever. Oh, just sucks. And it was showing like really nice relative strength today. We were talking about it, right? When the market was going down, this thing was going up. Just annoying. Yeah. That and it gave a nice 620 setup yesterday, which again I was kind of talking about, but I was like, nah, I'll just leave it alone. It really wasn't about the money loss, but it was right here. Just perfection. $28. Oh well. Yeah, if you guys need to chat in there too, you can. Or wherever. Chat in here, listen in there. I thought IONQ was a little bit better. But yeah, Rigetti ended up working out very nicely too. Yeah, I feeling a little crappy for not rebuying this thing, but whatever. A portfolio full of winners: Baba, Rigetti, Fig, Rocket, TNA, CCL, Tesla, UU, LU, AOI, FSLR. That's beautiful. That's how you do it. Trade and fade. That is literally picture perfect. If there's anybody who has picked up the concepts, my friend, your portfolio shows it's you. Yeah. Well, here's the thing, CR. You just have to understand the setups that you like to trade. And then you have to be focused on the right theme and you have to be focused on names that are in play and a low risk setup. Here's the thing. Look at Trade and Fade's portfolio. While he's been getting himself into all of these names, he has probably cut 10 other names along the way, right? That gave him small red from the onset. And he was just like, yep, time to let these go. And that is okay, right? You just let them go. Right. That's right. Trade and Fade. Yeah. There's going to be stocks that just don't belong in the portfolio because they're not acting well. But when something acts well from the onset, from your entry, that allows you to hold it and that allows you to be patient with it. So, and everything else just has got to get cut. Yeah. Cut the losers and you've only got winners left in the portfolio. That's 100% correct. There's a big bid at 32 or a big wall at 30 that's probably about to get taken out here for AOI as well. Shame. Oklo looks like this thing wants me to trim some off too. MP, this price action sucks. Here's $30 for AOI. Oh. Yeah, Oklo doesn't really bother me. The dailies looks great. The daily looks great. Man, I could go for a coffee. Chinese officials urge firms to shun NVIDIA chips. Ain't that something? Reddit not fun today? You know, it depends where you own it from. Like if you owned Reddit from way lower, then, you know, you probably don't hate it. Yeah, if Discord keeps having issues too, you know, we might migrate to like Zoom webinars or the YouTube, and I'll just put the stream like with the private link basically. I think that's an option. Yeah, AOI sucks to look at. Twitch is no good because I can't make it private, Tiger. That's the problem. And so then it's not really fair to the people in here if like anybody can just join. Something like IU, I would have to build a website. I'd have to build a website, which is possible. There goes AOI over 30. God, I'm not going to be able to stop looking at this name, am I? Yeah, Discord's the plan. But what I probably do is I'll also have the option of just doing YouTube private. It seems to work really well. I mean, I kind of trust YouTube a bit more because I know we wouldn't have any of those problems because Google's a whole lot bigger than Discord, right? Like Google has their shit together. Yeah, but I can make it private. There's like public, there's like I forget what it was, and then it's like untitled or whatever. I forget what there's 3 options, but I can make a private link where basically people would sign in, but like I kind of have to accept you to go in. Yeah, I mean, I wouldn't be migrating off of Discord. It would just be for the stream, which is, you know, very easy to join from the Discord. So no, nobody knows about the private chat, Cookie. That's just me and you in there, dude. It's just me and you in the private chat, bro. What are you talking about? Dude, yeah, that's exactly what AOI feels like. I'm no longer in it. Cookie's in it. I feel so shitty for having gotten whipped out yesterday. He bought it on Friday when we were first talking about it because he's a good listener. That's why he's a doctor. Oh, that's right. You guys can see me on YouTube. I'm going to have to kill my cam. Having too much fun before FOMC. MP, you suck, dude. This is another one of those where like this price action, it just makes me not even want to be in there. Just makes me not even want to be in this turd. Every day a higher high, every day a straight sell off from that push. I mean, oh my God. Stop it. Yeah, Tesla, my Bessie, hanging in there. You know, the thing about being on the YouTube chat is you guys could see the dogs. And we got the little girl sleeping right down there. Look at that little cute thing down there. How adorable. He's a proctologist. He's a doctor for assholes. Holy what the hell happened to Reddit? Reddit in talks to strike next AI content pact with Google. Oh my God. You know, they had this news, like they had that Reddit news, like that somebody was like waiting to hit the release button as soon as this thing hit the 10-day. Do you think like that the PR people are also technical analysts with like SMAs on their charts? Like, does anybody think that? Sometimes I think that. I've got to keep it totally honest. It literally hits the 10 and then boom, news comes out. What are the odds of that? Do I have a preferred oil and gas ETF? The best one is going to be the fast mover Gush. GUSH. A little bit thin moving, like a little thin, but and then my favorite would be ERX. It's been a while since I've traded these things. ERX. But again, problem is the volume. You'd rather be in Gush. And then obviously the XLE. You got the XLE. You've got, is it USO? Yeah, XLE, all the volume you could ever need. USO probably doesn't look as good as the XLE. Let me take a look. Yeah, no, not as good. One that is unleveraged, it would be the XLE. If you own 40 FB at 240, when should you get out? What's 40 FB? What the hell is that, Kevin? Start over a little bit because you lost me there. Oh, Facebook. It's Meta now. I forgot they changed their ticker symbol. You own it at 40? Oh, 240. Oh, man. You own this thing at $240? Dude. I would be looking at the weekly chart and I would be trailing like this 50 or the 100 where it bounced out last time. If you're not comfortable to hold it back to these April lows, I don't know that we ever go and retest these April lows. I mean, we might, but even now the 100 is well above that. So I would just be patient, dude. No matter what happens, this thing looks like it's going to be a double for you if you just trail this like 100 simple moving average. Dude, you got this thing at 240. You might never, ever, ever see this thing sub 500 again. What a buy, dude. What a buy. Unreal. You know when I liked Meta? It was right down here after this earnings gap up back above the 200. Right in here. You had this earnings gap up, then you had that high volume close, and then eventually you took that out right in here. Oh, just such a perfect setup. 188. Man. Talk about generational. All right, AOI, come on down, buddy. Meanwhile, Tesla keeps acting like an absolute beast. Yeah, what an awesome buy, dude. Sick job. $64.50. Oh, PDD is awesome today. Vince, you're in there with us, aren't you? Yep. Love it. You trimmed 1/4 Tesla at the close yesterday? Nice. Yeah, Tesla's a non-trimmer for me. Tesla is one of those that I try to hold on to for as long as humanly possible, as long as patience allows me to. You know, like 10-point moves in either direction don't really bug me. So, 500 in the next couple of weeks. Yeah, like if we did it in like the next 2 weeks. No, I don't think I would, man. I don't think I would trim. Here's the thing. At that point, I would just trail like the ascending 5-day. And when we close below the 5-day, then I would trim. Because at that point, the 5-day would be at like 480. Right? So I would be comfortable giving back $20 just to see this thing potentially go to 550. And then the 5-day get to, 530. Right? Like I have no clue. All right. I just don't know. And this isn't one of those scenarios that I want to trim. I want to sit in this thing and catch a double, right? Right. You catch a double and you make a couple $1,000,000. It makes your year, right? It makes like up for all of the little AOI headaches and missing hood and, all your little paper cuts, and all you need is one. I mean, my trim would likely come on a 5-day, but for now, I'm not even thinking about trimming. In fact, if this thing just went sideways for another week and tightened up, I would just look to buy more, right? I'm not looking to trim. I'm looking to add. I'd like this to be 30% of my account, right? And we're not there yet. So, I mean, if this could be, if I would have gotten a little bit more aggressive against this 200-day here, and I had started in a little bit earlier on 9/3, I would have loved for this thing to be 40% of my account. Right? I mean, guys, this is like rare bird, like opportunity to, to make 50%, 40%, 30% on your portfolio. something like that, like really, really move the needle. And yes, it's uncomfortable because you've oversized it, but you know what you're getting yourself into when you bought it. So half SLR, gorgeous. Look at that thing. Nice relative strength today. Very nice, Dirk. Nice job. All right, CCJ, you're up 1%. What are you doing here? You going to bounce for me, man? Back above the 5-day, which is basically where I was trimming yesterday, a little bit higher. MP, get your act together. Good. Yeah, reread that book. I think it's awesome. So Gil talks about the 620 setup against key daily levels. It's just such a, like, he loves it on undercut and rallies, which is like prior lows of price. So like, for instance, AOI, when it undercut the prior day low. So you would get basically your prior day low. And even if, like, it came back lower in terms of price and undercut, 912s low, that would have been a little bit better. But you get an undercut rally of the 5-day. So effectively you undercut the 5-day and then you 620 set up right back through. And then your stop is the low of that pivot. The key with the 620 setup is you're looking at daily levels and then your 5-minute for your granular entry. So, and it's the same thing with shorting, right? Like you get a left side peak and then price goes through it and then starts to fail back, back down through that level. And then you get your 620 set up to the downside. And then you take that and then your stop on the short is the high of that move. So what I like about the 620 setup is it gives you a very clear level for your stop. So you know exactly how much size you can take. And then the thing is you believe it to be a bullish chart, but momentum is turning back up. CRUX, that just looks like one of the Chinese pump and dumps. Oh, sweet. Yeah, that's true. Even though it's a private link, this will be available when the stream is done. Yeah, we should probably bookmark. This is going to be like the 28 or 27-minute mark on the stream. The name of the book, so it's written by Gil Morales, and it's Shorting with the O'Neill Disciples. No, I lost a little bit in the 2022 bear market. Like, I really didn't lose a ton of money, but I just didn't have a great year. And at that time, I had started to learn shorting from Nate from Investors Underground. So I was in IU. I was learning shorting. So I was really playing the side of the market where things were fading. Um, so it didn't go poorly for me. Also, I bought energy names January 3rd of 2022, and that was the leading sector in 2022. So, and I've talked about this before, and this is the nice part about like swing trading. Like through my own experiences, I like reaffirmed what I already knew. And that was that groups move together. So while a bunch of other stuff in the market was struggling, um, if you guys look at the XLE, and we'll look at this on the daily, and we'll zoom back into 2022. We'll go back a few years. And then I'll show you guys what this thing looked like going into January 3rd. So here we are, right? So before that period, you had a nice little uptrend, and then you had a bit of a pullback, really, but just clean digestion. Then going into January 3rd, you had this beautiful little bull flag setup. You find support at the rising 200 or flattening. You push up, and then you get these 3 little down days. And then going into January 3rd, you get the breakout. I bought this on January 3rd, $56. We'll never forget it. And then, at the time, I was noticing this day, there was a bunch of energy stocks set up the exact same way going into that day. So we can look at another one. Here's ConocoPhillips. And let's look at the way this thing looked back then. You get the little bit of a push up. You get the slight bit of digestion through sideways. You get the bounce, but this time it's at the 100-day. You get the 3 few down days in a row, and then you get the breakout on January 3rd above the 50-day. Okay? Then you also have a name like FANG. Same thing, but the name was also acting very strong. Right? And what did we get? Surprise, surprise. Very similar setup. You get the move up, you get the sideways digestion, you get the bounce at the 100-day, you get 3 little down days in a row. On the 31st, a small little perk up, the breakout on the January 3rd, and then the beautiful uptrend from there. You had the same thing with DVN. And as I started to look through these setups, right, I didn't really realize it, how they all set up the exact same way. Look at this. You get the bounce off the 100. You get the 3 little down days in a row. You get the small little green day on the 31st. You get the nice breakout on the 3rd, January 3rd. So it was the same thing over and over and over and over. And that's kind of when I realized, holy shit, stocks really move together. Groups really move together. Right. And that was the big aha moment for my trading, where I was like, light bulb went off. I need to focus on groups. And even you can kind of relate it to recently, right? Let's look at a few of these banks recently, right? Look at this move up, and then look at this sideways digestion before the breakout, right? And then recently you had your Goldman Sachs set up the exact same way, right? You had your move up, and in the exact same time JP Morgan was going sideways, guess what else was going sideways? Goldman Sachs, right? And it was the same thing over and over, and realizing groups are setting up together. Same thing with these semiconductors. Look at what an LRCX did, right? You had this move up followed by sideways digestion in May, and then basically a breakout early June, right? Wasn't TSM basically the exact same thing? Right? You had this uptrend, then you had this pause in May, and then you had the breakout early June. It's the same shit over and over and over, right? And groups set up together. That's why when I talk about groups, this is what I mean. When you see a really nice technical setup that you understand and that you like, right? What do other stocks in the group have to say about what you're seeing? right? Are they all kind of refuting what your eyes are seeing? In other words, you see one nice setup, but you can't find another one in the group, right? Or do you see a nice setup and then all of a sudden you see 4 names, 5 names, 6 names that all look identical or very, very similar? Now all of a sudden, if they start moving together, that's the conviction that you need to go ahead and get yourself situated in this group, because institutions are clearly here, right? They're sitting there saying, buy me the five of them with the best earnings. Buy me the 5 with the quickest accelerating sales. Buy me the 5 most liquid, etc. And then that's all you're worried about. So, man, FSLR. Run not bad. Yeah, no, run looks good. First Solar, I think, probably looks the best. I think First Solar is really the best looking is actually NXT. But the one with the best kind of momentum today, in my opinion, First Solar. Oops. Yeah, this one to me looks the best. All right. I'm down to a half position left. Yeah, I could share it again in here. Bottom fishing. Give me a second. I'm down to a half position left in Oklo. I'm not too concerned with the decision, to be honest with you. Pullbacks in FSLR, I'll consider. That's probably one that I wouldn't mind getting into. AAOI, I don't hate this rejection. We'll see if this thing wants to, find support near its opening print, and then I can, try to get involved into that one. But yeah, I don't have home builders, which would be nail. Yeah, TEM's another one potentially. But I don't really need to fly into anything. Guys, I could literally execute on nothing today and then tomorrow buy stuff. Makes no difference. Like, one of the things you guys will probably notice is I just don't suffer from FOMO. Like, yes, maybe I'm like kicking myself a little bit for not being in a name I want to be in, but I just do not suffer from feeling like I need to have it. Guys, I've missed so many big trades in my career, right? If I'd caught them all, I'd already be a billionaire. And I just don't care, right? It just does not matter. The career is, we've got another 40 years of doing this job. Yes, sir. Here to answer questions. Did I suffer from FOMO when I had less money? Oh, yeah. Sorry. I didn't see that you, no, not really. I didn't suffer from FOMO when I had less money. Here's the kind of the crazy part about when I started trading. I started making money right away. Within the first 12 months of my career, I made $1 million, right? Within the first 16 months of my career, I made $3 million. So I had nothing. Like, guys, for any of you guys who aren't familiar with my story, I got home from prison as broke as can be, right? No job, no future career prospects, nothing. Moved back home with my parents, and I started trading in the hottest market out there. I took my 30K, and by year end, it was 100 grand. And then, so literally from June 1st to December 31st, it was 100,000. And then it was a little bit more. And I paid myself like $8,000 just to get a little bit of money in the account and have exactly 100,000 going into 2021. By the time I got the boot in June, it was like June of 2021, I was at 3.5 million. So in 6 months, I went from 100K to 3.5 million. So like, I didn't really feel the FOMO. I was just making tons of money. So it's a very unique circumstance to be in. Yes, sir. Good morning. How's your day? Yep. Just because I had already bought, I was already in CCJ. Trust me, if I knew it was going to make this kind of a move, I would have bought more than 10,000 shares, right? But I already kind of thought to myself that buying it on 9/9 was the better day. So I had no idea it was going to turn out to be such a awesome mover. But here's the thing, even with the 10,000 shares, it's been one of the better trades with very little stress. So trust me, if I thought to myself it was going to make this kind of move this quickly, I would have put on 20,000 shares. But I didn't. I already owned CCJ at the time because I bought CCJ on, I don't know exactly what day this was. What day was this? 9/9. And then Oklo was on, it wasn't on 9/9 as well. 9/11. So I was already in a nuclear name that wasn't doing all that. So I think that's why I did it. And I was just like, look, I got 5% in CCJ, another 5% in Oklo. We'll just see what happens. LEU's working well. I think that's why, like, just to not get overly concentrated in one sector that wasn't even really working all that well for me. right? It was just a nice technical setup where you're like, yeah, all right, it's breaking the downtrend line. Let's go and give it a try. So I got myself down to effectively half of my shares are out, and from my average, I'm up 22%. So I mean, I know, right? Yeah. So I honestly wish I had a few more, but it is what it is. No big deal. We'll just let it work. Now I'm super comfortable in the position, and even if it were to fall, $5-10, it really wouldn't bother me. So the only name that matters is Tesla. There's only one name that matters for me, and it's Tesla. It's the one I want to add more to. It's the one that looks incredible to me. Just when you think like, oh, this thing's going to pull back a little bit more, it just like bounces right back. It's lovely. I mean, how do you feel about it? What's the name you're most, dead set focused on? That's what I'm saying. Yeah, you and me both. That's the right word. It could be that it's a late stage base. Like here might have been your first base, and then you got the huge move from 20 to. And here's the first place that Oklo ever hit my radar. When this volume came in, and I was like, what the hell was that? And we're talking about a stock that was $10 that still makes no money, and now we're at 90. Yeah, or here's the thing. You put on you leave yourself such a small piece because you've already made money on it. So you trim it down to such a size where it doesn't matter if it breaks below the 10-day. You're good with that as a trail. And then hopefully that little last 10, 15, 20% of your remaining shares go to 120, 130, huge gap up. And then that's where you sell it into that like parabolic, couple gap ups on the daily. And it looks like a, kind of like this kind of a euphoria on the very last few days. So let's think about this together. Is there anything you feel you could have done differently for the next time you find yourself in a BE? Is there anything that you think, hey, you know what? It's fine. It's going up without me. I'm no longer in it. But for the next time I find myself in this scenario, what could you do differently? Yeah. And the only thing that I could think to myself, just thinking it through quickly, the only thing I feel like maybe you could have done different, and I mean like the slightest difference, would be like, let's just say you had 1,000 shares, right? And you sold that half into strength, and then now you've got 500, and you just sell in 20% pieces every ATR extension over 7. So at 8, you sell 20% of what you have left, and then now all of a sudden you have 400 shares left, and then you sell 80 shares, and then you've got 320 left, then you sell, and you just keep the lot of shares that you sell actually become smaller and smaller and smaller. And at this point, you might only have 180 shares left, but you have something left, right? And at some point you said, I had 1,000, I've got 180 left, because initially I sold a third, and then I got myself down to a half, and then every ATR extension over 7. And at this point, let's just look really quickly for the sake of looking. BE is, try that again. BE is 15.11 times. Yeah, it's 14, 15 times. So you would have effectively had, I don't know, call it 8 trims, right? So you would literally have 80 shares left. But it's still 1/10 of your original position effectively. And something is better than nothing, just so that, maybe this stock ends up getting to $100 and does a 2-for-1 split. You have no clue. Agreed. Well, here's the thing. I think you trimmed right, because you weren't getting euphoria. You were holding it. And I remember even when you bought it, like the day after you bought it, it like went against you for a moment, and you still held. Yep. It was like right here. It was like right here on 819. I remember it perfectly. And all of a sudden you held it. It held the 10, and you hung in there. And then this, like, once the stock got you green and then pushed away from your average, it's like you're in the driver's seat. And then it starts to get a little extended and more extended and more extended, and you're just peeling off into that strength. Um, and really, I feel like you did a nice job, because I'll tell you what, like over 13 times its ATR from the 50, I start to actually think this can go the other way and can actually be a short-term short. So, yeah. And I'll tell you what, too, like as your portfolio grows, like obviously you went a little bit aggressive on BE, but there will come a time when your portfolio has grown where you don't need to take a huge position size to make a ton of actual real world cash, right? Like for sure, it helped move your portfolio percentage wise because you got aggressive. But in the future, you can take that 10% position. And if you're wrong, no problem, get out. But if you're right, the money that you'd still make on a 100% move ends up being a right. And at BE, you felt extra good about it. Maybe it becomes a 20% position. And that's like I'm sizing it up, trade. So, and that'll be nice too. Obviously, you got to learn to understand like when there's a special opportunity, and you found it on BE and you had big conviction the whole way through. So, I'm super happy. I know, dude. I look at Tesla and I'm just looking at this weekly and I'm telling myself, this move just got started. Do not sell it. There is no sell. There is no trimming this position. I would rather give back my open gains than to potentially leave. Like Elon Musk is dude, he's the only CEO ever who's effectively has $1 trillion pay package in play. He's going to go out there and get that money for himself. Doesn't matter what he has to do. So I think we're going to be looking at a $2-3 trillion Tesla, even if it's in 12 months, and that's a triple, right? Guys, that for me personally, that moves my portfolio in a huge way. I just have to sit there and do nothing and relax. And even on a day like today, Tesla's down 0.5% and the market's down 0.5%. I would actually say, considering the way Tesla moves, it's a bit of outperformance from Tesla today versus the market. So, dude, it's not one of those that I wish to sell. Like, I have no desire. I would rather give back the open gains than to sell this thing too soon. Like, I'd rather give back half of my gains because I think that that's probably all I would end up giving up before I realize this thing's not going anywhere. But my gut says, dude, what's $60? We're talking $60 from Tesla, and you're at a new all-time high. We're going up another 60 fucking bucks, dude. Like, yeah. Yeah, I agree. And I remember when I was studying some Christian Kulamagi and even Pradeep, and he would talk about the momentum bursts. And like when you get a stock coming out of a tight area, this is your momentum burst, right? Then it goes for a pause. But effectively, I sold Oklo almost perfectly out of that 3-day momentum burst, right? Or if you're in something like IONQ and you get that 3 to 5 day momentum burst. This is all you're looking for. Realistically, you get a move like this that moves up 30% in 4 days or 40% in 5 days. You take a trim, half of your position into that. It no longer matters what happens with the stock. It's a green trade no matter what. Does it end up being some monster home run where this thing goes to 100? Or does it just end up being a really nice green trade where you just made 40% on a, call it 5% position, but you still have another 5%, which by the way is even higher than where your trims were, but you're completely and emotionally detached from the stock. Your focus is on other things that are moving in the market, right? What's setting up? Where's money going? What can I get involved in, etc. So it's that was like the first bit of information that I ever learned about selling some into strength, de-risking some of the trade, financing some of the trade. And then from there, how do I hold on to the rest? Like, is there some kind of concrete rule? And then that's when it was like, okay, extensions from the 50-day, but like, what is the average of your common stock when it starts to falter a little bit? And you can't just look at the anomalies like a BE. You have to say to yourself, at 7 times its average true range from the 50, that's when we typically start to pause, right? There are stocks that are unicorns, but you also have some rules to keep you in place. And that's at 7x ATR from the 50. You get a 20% trim of what you have left. And then every ATR above that, you sell some more. But ultimately, the exit, the complete exit is if at 7, you get that trim off and then the stock just consolidates, but then breaks the 20-day, that's your exit on the rest, right? Or the 50-day, that's your exit on the rest. But if it continues to get extended 8x, 9x, 10x, 11x, 12x, now you're selling 20% of what you have left until you're effectively selling all of it, the last of it, into the parabolic move, which is what a BE seems to be doing. So, yes, sir. MBIS looks fantastic. Oh, yeah, sure does. Yeah, this thing looks good. This is like a beautiful little high type flag, but we've got about 2 hours until FOMC. On the selling into extension, if you sell on 10x, do you sell if it reaches 10x again later? Or no. I would wait for 11x. If it gets to 10x, but then it just starts to go sideways, I do it. So I can't trim it, and then everything tighten back up and then break out again, and then tighten back up and break out again. That would be the ideal scenario. All right, guys. I'm officially downloading Perplexity Comet. Wish me luck. Man, good thing I didn't stay stubborn with Palantir. PDX, who's on first? All right, I'm very excited for this comment. I could see myself probably. Oh, that's awesome. Yeah, good. Don't stay stubborn, dude. When it's time to exit shit and it's just not acting right, it's time to go. I mean, I could have sold it for a couple bucks this morning, but I took literally a nothing hit on it. So, but we just don't stick around with stuff that's not pushing higher. Oh, he just did the Abbott and Costello exchange. Who's the one buying? Yes. For anybody who doesn't know who's on first, Cookie, you are next level, dude. Oh, that's great stuff, man. Yeah, Oast is another one of those. I didn't have it on last night's watch list video. I kind of forgot to talk about it, but not a bad. I mean, if it closed like this, Judah, tomorrow, if the market's performing well, I think this thing could be ready to go literally as soon as tomorrow.
Order from Microsoft Edge.
NVTS looking pretty good. Yeah, not bad. It's got to get back above its 50 and re-show some momentum, right? This thing has made a huge move off these lows from 2 to 6, really 2 to 9, and then back to 5. But, you know, if it can regain a little bit momentum and get back above the 50-day, not bad. No, it's not no sound. I just haven't been talking. All right. What else? Dashboard. All right. So what are we waiting for here? We're just waiting for the rate cut decision. Facebook. I haven't looked at Uber since this morning. What's going on with it? Down 5%. Very choppy. No good. Yeah, I am watching AOI, but I just wouldn't buy it before this announcement. Anything else? YouTube. right, anything else? Click up. Sweet. All right. Well, now that that's done. Open Door still hanging in there. Looks like Martin Shkreli loves getting himself into squeezed situations. Yeah, I think it's consensus. It's consensus that we get a 25 basis point cut. That should be 100%, honestly. ATYR. Haven't seen this one. Oh, man. MP sticking around. Good. CCJ up 1.5% today as well. Tesla, fantastic. CCL flat. ARC down 1%.
The XLK ETF just down a little bit. I think that's because of NVIDIA. Wow, OPAD's up 21% today. General Mills, Cracker Barrel, Nano Dimensions. Or they call it the VIG, VIG, or the juice. The bookies never lose. Their job is just to get equal money on all sides. You trim some PDD. Yeah, this is one of those names that I just can't sell. I mean, I don't blame you for doing, what you think to be the right decision. I think that it's fine. But this is one of those that I just can't really trim either. I just look at this weekly chart and my gut just tells me that this thing has some serious potential if it can get moving. Such a big base. Yeah, if it chops me out a little lower and I have to cut a few lower, I wouldn't be too mad at it either way. But it looks fine.
Yeah, Wynn's looking pretty good. It's about the only casino stock that's looking really good, but it's hanging in there. What about AOI, Shane? I don't own it. And there's not really a way that I'm going to buy this thing before FOMC. There's just no way. So, yeah, it's fading like it did yesterday, only for it to bounce back all day today. I think you got to just make sure you keep the bigger picture outlook intact. Like, if you have a good entry, and I don't know if you're in it or not, right? That there's nothing really wrong with the daily. Like, yes, it's chopping around here. Yes, it kind of sucks, right? That it's fading off, but what's really wrong with it? Nothing, right? It's down 0.2% while the market's down 0.5. So, in fact, its relative strength line is actually going up versus the market today. It's actually stronger than the market today. So, there's nothing really wrong with it. Right? How's AOI acting over Palantir? How about AOI over NVIDIA? How about that one over Coinbase? Right? So it's like its relative strength line's actually going up while that of the market is fading even more than this, very fast moving growth stock. So I wouldn't worry about it too much when a lot of people don't want a bunch of exposure going into this meeting or because of the uncertainty with it. You had FOMO earlier when it was moving up? Yeah, so did I. But did I buy it? No. And now watching it come down, do you regret having FOMO and realizing you shouldn't have FOMO at all? This is why you don't need to have FOMO. The second you get FOMO, it starts to pull back in a nasty kind of way. And then all of a sudden you're like, wait a second. This thing's fading off. Yes, sir. Thanks for being here, Neb. We'll see you tomorrow or maybe later today. Probably later tomorrow. Yeah, Mara, not all that bad. Not bad at all. Oh, open door. Yeah, CoreWeave, not bad. Found support right at yesterday's lows. Hood trying to come back around and go green. Not bad. Fresh high there for open door. I gotta stand up. My neck's hurting. eBay too slow for my liking? Yeah, it's been a little slow for a while. Yeah. I mean, it moves 2% per day, Sid. I don't hate it, but I also don't love it. Oh. You know, I only have one problem with Ethereum. It's that it is super crowded. And it's not really going anywhere. Could it go? You know, I'd be hopeful that it could. You know, ETHU is seeing a bit of a pickup in volume here, but again, I can't really buy it in front of FOMC. We all know we're going to get the quarter point cut, but we just don't know what the reaction is going to be to that cut. That's the problem. Yeah, ETHU moving. Yeah, I see it, but I just can't buy it. Yeah, exactly. That's another thing too. Do we get 2 more cuts this year? Do we get 1 more cut this year? I think that matters too. Mr. Too Slow Powell. Yeah. Well, it's like inflation's upticking and now you're going to make money cheaper. You know? Can't really blame gold and Bitcoin for going up higher in that scenario, right? Yeah, I'm going to listen to the press conference. Yeah, it's in a few minutes anyway. At this point, Little Beardy came to say hello. Yes, Sedge is doing very well. MPWR, it's low volume, but it's not low liquidity. You know, it still trades by day's end $500 million a day. Again, don't confuse volume with liquidity. It's very important. Yes, no volume being traded right now, but it's a $872 stock. How many shares can you buy? Right? Not many. So just because it's only trading, 110,000 shares, it's still much more liquid than a lot of other names out there. You know what I'm learning about this whole AI thing? Building prompts is actually very important. Like if you don't know how to make a prompt, what would you consider a normal red day versus too big? Again, it depends how much the stock moves. If we're talking about a stock that moves 2% per day and it's down 7%, that's a lot. But if the stock moves 12% per day and it's down 7%, then it's within its average true range on the day. Yeah, I'm learning that. It's literally all about the prompts. At first, I didn't realize that. But like if you know how to make the proper prompt, then you can get AI to do what you need it to do. All right, FOMC in 5 minutes.
Members, less than 2 minutes until the FOMC announcement. Once again, we are expecting a print of 25 basis points. That's the expectation. We'll be posting a link to the statement as well as the dot plots in the news desk.
The water's not warm. XXRP trying to make a comeback. ETHU. FSLR sticking around. And just like that, ETHU, a little bit of a colonoscopy.
Members, FOMC cutting the range by 25 basis points.
Oh no, who could have seen that?
Once again, the FOMC cutting by 25 basis points as expected. We're posting a link to that in the statement in the news desk. A link to the statement being posted by the FOMC, as well as a link to the dot plot
Tesla green on the day.
In the news desk.
Beautiful. Yeah, FSLR, nice. Hanging in there. Oh, yeah, no surprise. That's good. No surprise is good. Unless, the market was looking for a surprise. I don't think it was. I think the market, look at the Russell, man. Woo-wee. What?
Members, the median projection shows 50 basis point cuts more in 2025. So downside risks to employment have risen. Moran dissents in favor of a half-point cut.
All right. Yeah, Open Door just got smoked there on some big volume. Martin Shkreli said he was adding more.
Fed projections.
Just kidding.
So 9 of 19 officials see 2 additional cuts in 2025. 2 see 1 cut. 6 see no more reductions. This is Fed projections.
Mm-hmm. Guys, IWM is going to see a new all-time high. I mean, there's just no question about that. That should be fairly obvious.
Inflation has moved up and remains somewhat elevated.
Yep. We kind of knew that. Steve mentioned that. Inflation a little sticky. Man, I wish I wouldn't have gotten chopped out of my TNA. TEM. The water's back to being warm. FSLR. BEA. Beautiful. Yeah, 25 basis points. Oh, yeah. Shit is pumping. FSLR. Hell yeah. Very. New high for Rigetti. The only name that matters for me, Tesla. Nice new highs there for ARC. Yeah, FSLR would have been a decent little one against that pullback, or as soon as it started to turn back up. But CCL, not bad. Tesla, a biggie.
AEVA 2000% bust.
IWM. CCJ, nice. Yes, Powell will be speaking.
Members, keep in mind, coming up at 2:30, we do have the Fed Chair press conference. As always, we do not speak over Fed Chair Powell unless a market-moving headline. The Trade Exchange Squawk will go radio silent at 2:30 p.m. We'll be posting a link to that in the news desk.
Heard it here first. 2:30. Thank you, Bottom Fishing. MP, nice job. Coming back, buddy. Nice job. Pinduo Duo. Let's go. The portfolio is ripping. It's skin ripping. Palantir is still under where I cut it. Yeah, it was a nice cut. I'm not gonna just hang around stubborn in positions that aren't going. That's just not happening. It happens, dude. Doesn't even matter. It's just part of trading. I could say the same thing about AOI. Robinhood, the app, is having issues? Really? Everybody's trying to FOMO in. They're going to soon remove the buy button. Yep. I mean, I bought nothing. I don't see, a ton to do. I don't know. I think that would actually take a couple of days, truthfully. But we've seen crazier. Look at Palantir. Yeah. Yep. Sure is. It's gonna make you regret it. Not having more. The only thing you're gonna regret is not having more. Hood gave that move back. Oklo lower than my trims too, so that's nice. Not getting stubborn, and at least I'm cutting things at the right spots. Yeah, IWM is holding up. And guys, positioning. This is like when you kind of notice positioning is what it is, right? The Russell is still outperforming. And I'm not looking to get involved in anything here. Just be patient. There'll come a time. Even AOI coming back down. I'm literally not doing a thing. We can bounce back tomorrow for all we know. Just got to let your stocks work for their own individual price action. And do we have a name or two that we want to short? Great question. Nvidia below the 50? Yeah, who knows? When does Powell talk? In 15 minutes. City. Yeah, too late, Powell. This is what happens when you're too late. Already. It was looking so good about 8 minutes ago. It was looking so good 8 minutes ago, guys. Like to go short. Is it PLTZ? Yeah. No, I don't see why there would be. Like PDD's hardly budging. Yeah, I don't see again, and I don't see a reason to try and assume this pullback, that was the bottom. Now we go higher. Like we have no clue, right? Let's just wait for things to tighten up. Let's make sure you're managing your risk on your open positions. And then the rest of it is completely irrelevant, right? Make sure you manage your risk on your open positions and then figure out where to get the rest of your money when it's time. And we'll just listen to Powell here in a few minutes. You know, Papa Powell can come in and save the market. That's actually pretty incredible. Like something like FSLR to me is holding in there very well. Like that's what I want to see. If the market can start to turn back up, that's the kind of name I'd want to get my butt into. You know, maybe even something like AOI, almost green on the day. You know, the Russell's still hanging in there pretty well, despite, you know, that kind of pullback. It's still up 1.5%. BE back at high day. Yeah, there are just some names that just really don't care. You know, Tesla's fine. It's down less than 1%. AOI, don't mind that action at all either. He's not distracted at all. All right. Yeah, FSLR, very nice today. No, just if I get, so like if I'm risking like $2 on the trade or $3 on the trade, if I go up like a multiple of that, or oftentimes too, like if the market's coming down and my stock is just going sideways, I just want to give it a chance to work, right? But if the market's going up and my stock is going down or sideways, then I'm more apt to just say, you know what, if this thing hits break even, I'm done with it. So it oftentimes is dependent on what the market is doing as well.
Members, once again, that link is posted in the news desk for the FOMC press conference. As always, we do not speak over Powell unless a major market headline. That starts momentarily. Should exchange squawk, we'll go radio silent.
Just mess with everybody.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals and in light of the shift in the balance of risks, today, the Federal Open Market Committee decided to lower our policy interest rate by 0.25 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the market slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. policy is not on a preset course. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country.
But not
Everything
headphones.
we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Great. Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Myron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception that the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
You and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation?
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible and that there may be effects on employment, but that I would say, if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I would call a curious balance. You know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Ouch, S&P 500.
Nick Timmeros of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. But what we can say is this: that over the course of this year, we've kept our policy at a restrictive level, and
Awesome job not budging.
Clearly restrictive level, I would say. So, and we were able to
China, yeah. Oklo, good trims on my part. MP, kind of annoying, but still green on the day. And as long as we're above the 50, that's good. CCJ up 2% today, so pleasant surprise. Tesla only down 1%. I see no issues there. CCL down 0.3. As long as we're above the 50, I see no issues there. And ARC down 1.5. You know, if we close below the 5-day, I'd probably take off my ads from 9.9, and then I would just go back to my $59 cost basis. So if we close below the 5-day, but for now we're okay too.
Under what circumstances would
Don't even know that that's the best idea, but
points rate cut be warranted? And how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts.
yes, 76, 74 was my ads. So if I have to take those off,
out of place, and
you know, I'm happy to do so.
To a new place. That's not at all.
QBTS fresh highs. Those quantum names are acting awesome.
Right thing so far this year. I think we were right to wait.
Look at this move.
How tariffs and inflation and the labor market evolved. I think we're now reacting to to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now. And so that warrants a change in policy.
Colby Smith. with the New York Times.
QBTS is the new
Viewing
NVIDIA,
today's
dude.
cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening.
I'm not talking about it
Also, the
anymore.
committee's view that the
I'm not talking
dynamics of
about it
the downturn
anymore.
Are already in place.
I got to get on that new wave.
Trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment.
Yeah, thing is we got an hour till the close. I mean, we're gonna close down, it looks like. But do we get follow through tomorrow? I don't know. So
The projections for growth,
all I know for me is I kind of want to, manage some of my risk, take my gains off from my recent ads on ARC at $76, 76.74. So those, I might let those go. I bought those on 9.9. And if we close below the 5-day, and I'll just sit with the $59 average. Otherwise, everything else is fine. PDD's a beast. Oklo is fully trimmed. Nothing I can do with it. MP and CCJ are fine, and CCL's down 0.5%. So yeah, the leaders just aren't really budging. So that's good.
And the Fed not getting back to the 2% target until 2020. So I guess I'm just wondering how you characterize the risk to price pressures.
Wow. IWM. Yikes.
Yeah. So I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low, still at relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of
The VIX is down. Well, that's nice.
Because of unemployment. I think that most of what's happening in the employment area
All right.
is related to immigration, which your rate cuts wouldn't address.
That's good.
How do you see that as more important?
So it'll just be a low volatility fall.
Almost a full percentage point above your target.
But I was saying that what's happening in the labor market has more to do with
It's going to go down slowly.
with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs.
Bro, are you looking at the inverse, the inverse VIX?
You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
Yeah, my VIX is up too.
Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does
It's
it
not.
present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years. But the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that the basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that though, right? We have to, our job is literally to make sure that that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation, we continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's
A persistent inflation outbreak. Dude, talking about inflation like it's COVID.
And that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal? So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates. So
it's probably going to be speaking for another 10 minutes, probably.
Presumably will be better for the labor market. You see people who are
and then everything could just start ripping again. So don't worry.
And younger
just be
people,
patient.
Minorities are
this will perk right back up.
I'm finding jobs.
It's a bull market,
job
boys.
Finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment. And the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
I would have raised rates until Fartcoin goes to zero.
CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration.
Yeah, dude, what? I know that's a joke. You haven't seen the news of companies adding Doge to their treasury or to their balance sheet as like a treasury holding?
Meeting to meeting, data point.
I'm 100% on my life being dead serious with you.
So I think we're in a meeting by meeting situation. We're going to be looking at.
I wish I could lie about something so insane.
So
no, that's a true story, dude.
Yes, but the SEP it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well.
Yeah, Zone is one of them. Zone and BTOG
try to agree on what
do a Dogecoin treasury. They're trying to accumulate $1 billion Doge. So effectively, they're just burning their money.
Are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question. Is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you gotta be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that, but it's also partly about what's the right thing to do in light of this, of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based on, in this kind of highly unusual situation, and we do. So, but we get together, we discuss.
Yeah, FSLR, very poor action. The IWM gave all that back and then some.
You're right, it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help?
I just cut my ARC ads from 9.9.
The framework, and I think people find it hard to believe.
Couple dollar gain.
That is not at all.
$2.
Think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now. And people they're making their arguments, and we're having a great discussion around these challenging issues. So,
You see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the
Tesla's still
rates
cool.
on data?
CCJ is still fine. MP has down to the 50-day for me.
The revision that we saw was almost exactly what we expected. It was amazing how close.
We still got a little bit of wiggle room there.
The reason for that is, for the last bunch of quarters, there's been almost a predictable overcount. And I think
look at PDD go. Let's go, little buddy. Look at this gorgeous thing.
Of course, it has something to do with low response rates, but it's also got to do with what's called the birth.
God, I want to add to this thing too.
Because a good amount of job creation happens around new companies and how many go out of business, how many are founded. And it's just really hard. You can't survey for that. You've got to have a model that predicts that. It's quite difficult to do, especially when the economy is undergoing big changes. So I think they've been working on that and are making progress on it. But the data we get is still good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the first the response rate is quite low for the first month or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month. And you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
Well, for benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. It shows a weaker job market coming into this year. If you had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
You know, we have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action. We took that appropriate action today.
Thanks, Howard Schneider with Reuters. So as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a 0.25 percentage point now is going to arrest that?
Well, I didn't say that I thought a 0.25 point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And markets has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that, you see minority unemployment going up, you see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all this together and we see that the labor market is softening, and we don't need it to soften any more than want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying.
Yeah, I don't think the Chinese equities are trying to go anywhere. I mean, look at how well they're acting. They didn't even flinch.
Investment and on the consumer spending side in higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is moving along. Economic growth is going to be 1.5 and the 1.5% higher this year, maybe a little better. Forecasts have been coming
Mark
up
with the old shake.
So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So that's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
Of course, I'm not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Bank system, Federal Reserve system, and at the board. Are they the right size? We're actually going through a 10% headcount reduction through the whole Fed, including the board and all the reserve banks.
Rigetti, 22.
Employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that. And I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
Not an independent review?
We're certainly open to, to always trying to do better.
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down. And so it's probably a number of things, but yeah, it's probably a factor. Hard to say how big it is.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Well, if you can take goods, just sort of the broad goods category, and last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we essentially returned to zero or slightly negative inflation.
Palantir, rip right back up.
Of course, of the past year,
Okay.
1.2%, which doesn't sound like a lot, but it's a big change. So we think, analysts have been.
Yeah, Tesla's gorgeous.
Contributing, 0.3 or
Tesla's gorgeous.
to the current core piece of inflation. It's 2.9%.
Guys, can we really be bearish when Brighetti's at 22?
What seems to be happening is that
Can we really be bearish?
tariffs are mostly not motivated by
PDD's up 4%, CCJ up 2.5% today.
companies that.
Ultimately, it's not bad out here.
If you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs.
Hood, very nice, out over yesterday's highs.
That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence is very clear that there's some pass-through.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Hi, Katarina Sarai, Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of the forecasts that we see today? The median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret what you guys are saying?
So there's 12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really, the only way for any voter to really move things around is to be incredibly persuasive. And the only way to do that in context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters. And that's how it's going to work. And I think that is the way the institution, that's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
Claire Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between someone even expecting.
Yeah, AAOI is very nice as well. Nice comeback there.
What were the kind of range of views
Showing relative strength today, and the second the market begins to get picked right back up.
And on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut.
Oh yeah, OUST.
Some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. But let's remember though, the unemployment rate is 4.3%. The economy is growing at 1.5%.
Really nice pullback and bounce for Palantir right at the 50-day.
Challenging economic times, but from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I
very
mentioned
nice.
earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore, we must keep our eye on maximum employment.
Right back at it.
Those are our two equal goals. And you will see that there's a range of views.
Well, not doing too much today was the right idea.
Thank you, Archie Hawke, The Economist. You mentioned earlier that job creation is running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect. But it's clearly come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. There are just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly. That's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point, and that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up outside, just one tick outside of the range where it's been for a year. 4.3% is still a low level, but I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
Well, if I may, you mentioned the downside risk to employment, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PC numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are all right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding, and it's a good bit from consumption. It looks like consumption was stronger than expected. What we got earlier this week, I guess. And also we're getting a fairly narrow sector is producing a lot of economic activity, which is the AI build out and business investment. So we watch all of it, and I would say we did move up. The median for growth for this year actually moved up in the S&P between the June and September S&Ps. So and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates,
I just don't like the way ASTS sold
how
off.
concerned you are that current rate levels are exacerbating.
Right? I mean, it looks like it has potential, but it's living under the 50-day. You live under the 50-day, and
housing is
just no bueno. There are stocks in that exact same group that are acting so much better.
Monetary policy when the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that. And they were able to
It's the only problem with ASTS.
The other side of that is when inflation gets high and we raise.
When it gets back above the 50-day, I'd get a little bit more excited with it.
So rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates, and that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help get builders will help supply. And so some of that should happen.
What did Cookie say yesterday? Snow is cold.
Pretty big changes for it to matter a lot.
Usually.
Big changes in rates for it to matter a lot for the housing sector. And
Yeah, it's well below the 50 simple on ASTS.
That's a strong economy. That's a good economy.
Yeah, I mean, snow's.
There's a deeper problem here. There's not a cyclical.
I don't see a setup where could you buy it over today's highs, maybe tomorrow, as basically a bounce off the 50 simple moving average? Yes, maybe, but I would almost rather wait for the breakout of 241.
And just a quick follow-up. During the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
Yep.
Forecasting is very difficult, even in
There's the great bear market.
As I mentioned before, forecasting is a humble lot.
Yeah. Lasted like 4 minutes.
Right now is a particularly challenging time.
All right, brother. Enjoy your day.
And so I don't know any forecaster anywhere really.
Gold coming down. Does that mean we see the dollar going up?
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet than pause the unwinding?
Well, I think we're cutting the size of our balance sheet quite marginally now. As you know, with the balance sheet, we're still in abundant reserves condition. we've said that we would stop somewhat above somewhat above an ample reserves level. That's what we are. We're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large, so I wouldn't attribute macroeconomic consequences.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the
glow right back to green
for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires.
Yeah, I mean, ultimately, I would say the portfolio is acting fantastic. Other than me selling my recent ads on ARC, which I don't really feel too bad about doing. It's not like this thing moves at like some super fast speed. But yeah, outside of that, which I probably, could have held on a little bit longer and seen some of this bounce. But other than getting rid of that, everything else is acting pretty well. I mean, Oklo almost went green there. ARC is slightly red, and everything else is also green in the portfolio. So would be nice to see this one, finally push out. I've been sitting patiently in this one, and CCJ maybe can come back to life. But say the standout today is obviously Pinduoduo for me. Oh, you know what? Didn't take a look at home builders yet. Ooh. No bounce in the home builders. Interesting.
This rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
We're tightly focused on our goals, right? And our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And I would say it's a mixed picture, but households are in good shape, banks are in good shape. Overall, households are still in good shape in the aggregate. And I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities.
AVAV,
I would say
like that one, Nikki, much better than ASTS, right? Same group. Like, how come this one's well above its 50 and never really got crushed? Much better.
You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run, they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, wondering.
Yeah, less than 10% from an all-time high.
The debate over Fed independence and the growing deficit is putting pressure on inflation expectations.
So as you said, shorter term inflation expectations have tended to respond to near term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer term inflation expectations, both break even in the markets and almost all of the longer term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that, we need to, continually show and also discuss our commitment to 2% inflation. And so you'll hear us doing that. But as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do. Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
All right. Now that nonsense is over, let the bull market continue.
Members, Fed Chair Powell press conference has now concluded.
AV, very nice. And ARC almost green on the day. Love it. Yeah, Melly with the spreads is nasty. Sound is on the move. I didn't buy anything interesting. Nope. Just holding on to my names that are working. They kind of came and shook me out of Palantir earlier in the day, and they shook me out of my recent ads in ARC. But those I still closed for about a $2 gain, $3 gain, I think. $2 gain. And that is indeed a new high on Tesla. Let's go, little buddy. Well, it's flat on the day right now, but this thing was dumping kind of hard and was below its 5-day, and the market was also pulling back kind of hard. So I didn't want to give back any more of my open gains in ARK, right? Because I only cut my ads. I didn't cut my shares from 59. Those I still have. Trust me, if I knew it was going to bounce back, I would have added more down there instead, right? I mean, but when things are moving in real time, you just got to do your best to manage your open positions. Like I said, I wish I had a crystal ball and I would have known that it was going to bounce. Yeah, VNet's not bad. I don't see a setup for it, though. Yeah, unfortunately, I never had one. We just needed Powell to stop talking. It's a bull market. And ARK almost green on the day. Yeah, that would have been, again, hindsight, I don't sell any. But I still have shares, right? I still have shares from 59. So, I'm not really too bothered by it, to be honest with you. Yeah, pretty low risk spot right here, I would say, using the 50 simple as the guide. What a bounce back in Palantir, too. Right up against the 50-day.
On Tesla, coming from Electric, says Tesla is trying to hide 3 robo-taxi accidents.
Here you go. Their smear campaign, the smear campaign. It's bullish, all right. Yeah, maybe AMD tomorrow looks pretty interesting. TEM is looking pretty interesting. Palantir, I'm okay buying Palantir back if it can kind of break that level we were looking at earlier. My problem with Ethereum is it really hasn't gone anywhere in a few weeks, and it's very, very crowded on the long side. That's my actual problem with ETHU. Yeah, if we could take out 171.5, I would happily buy it back. All right, I made a couple. I only lost a little bit there, so I think I only lost like $1 there, a little less. CoreWeave 127. I think that it would be 125 and 126, but no, a little sloppy still. I mean, maybe it can go, but not necessarily a setup that I'd put my attention on. It doesn't look bad. It's back above the 50. Yeah, OUST, that's a nice one. New high in PDD, 135. Let's go. I know Ed's sitting in there with me too. Let's go, Mr. Barry. Let's get it. Let's see if this thing wants to double for us. Might take a year. But fortunately, we got the patience. yeah, we'll see what tomorrow brings. I think, we probably just chop around for the last 25 minutes here. No like actual direction. AOI, hopefully this thing pulls back and I could buy it. But there's only one name that matters, and that is Tesla. KTOS has been very nice. AVAV, KTOS. But there's only one name that I truly care about, and that is Lil Tesla. Send it to 500. Yeah, we're thinking black. Black on black. Black car with the black rims. That's what the fiance is talking about. But we'll see. She also says she likes the Porsche, but I told her we're not buying a $180,000 car to just no. She likes the truck. She likes the Macan, or not the Macan, the Cayenne. And I was just like, yeah, I love you, but we can't just be whipping around a 180K truck. No, it's actually more than that. The new ones, the Cayenne, it's like 160 something, I think. Dude, I'm like very frugal. If you guys knew me in real life, yeah, the new GLE is very nice. That's also super expensive too, man. I don't need a 200K car in my life. I don't need it. I've only got a 2-car garage, guys. If I had like bigger garage, maybe a 3rd car, but yeah, exactly. Exactly. We're trying to have kids next year. We need a cheaper car. The GX 550, I love it. She says it's too boxy. I love that truck. Yeah, I'm more frugal than you guys might think. I don't actually spend money. I kind of made like the stupid money spending decisions when I like first started making money, and I bought myself some diamond chains, and it was the stupidest thing I ever did. It's like the worst kind of money you can spend. And then you realize like, I just spent, like 10 vacations on a couple chains. Yeah, I have a couple Cuban links, dude. So I have some gold chains. I just don't really wear jewelry. Except a little bracelet. That's it. Yeah, diamonds are kind of not keeping their value because everybody's doing the lab growns. No. Mm-mm. We're not doing that either. That's a terrible idea. That's a terrible idea, Sean. A chaperone. We've thought about doing we've talked about doing an au pair. It's like we're in our 30s. Like, do we really need one? Yeah, I just can't add to Wolf personally. It looks like it's trying to go higher, but I just can't do it. Far too extended. Yeah, 9 times its ATR from the 50. Can't do it. What's better is like something like OUST. This I can get behind. This a nice tight setup. $1.47 times. Yeah, way different. I could get behind a name like OUST. If Wolf weren't so wildly extended, then I'd be all for it. Yeah, I saw Dave yesterday kind of building out a nice base. Just not really dying, which is good. It just trades so thin intraday. You know, even if PDD paused, I think it's fine. As for me personally, and I have not taken a single share off of PDD. If we're just gonna continue to hang out above this 20-day, I'm not going anywhere. Right? Like this is the kind of stock where I want to own my shares and I'm going to look back at it and it's up at $170. Then maybe I can consider taking off a little piece. But, you know, PDD is in a big country theme right now. And sometimes that can go for a while. Like if China's going to just get love, like a little bit of money leaving from US equities and going to the Chinese equities, those names can make such a big move. I mean, look at Baidu. You know, look at Baba. Oh, there will be a China deal. We got the ultimate deal maker in the White House, guys. Don't worry about it. Oh, kind of a tiring day. You know, maybe there's a chance that Ethereum actually starts to push. The thing is I probably wouldn't buy Ethereum going into the weekend. So it has to like start to really shape up and push tomorrow for me to consider ETHU. And then obviously AOI is still on the radar. Something like OUST is still on the radar. NBIS is not too bad. Shopify is not too bad. TME is not so bad. It's a handful of things that are acting well. My goodness, man. Yeah, USAR is a rare earth play. I'm already in one of these. It's MP, and this thing is just, can it get going already? Can it please get going? Danny's going to say this all the way up until PDD gets to 160. Stop looking at it, Danny. Stop looking at it. It's good. It's good. Let it work. I don't hate CoreWeave. I just don't love it. I feel like with the volatility in this name, it's probably best to, kind of look for it off of ascending moving averages. If it's going to go, it's going to be just fine, and it'll get picked up off of ascending moving averages. Any pullback should be pretty good. What's my ideal entry for TEM? Again, a pullback against an ascending moving average there, I think would be good. I just still find this action in here a little bit sloppy. And it looks like this action in TEM looks a lot like what we've seen in Oklo and Palantir and Coinbase. It looks like Robinhood. Like, look at TEM and then look at Hood. So a lot of things are moving very correlated at the moment. Right? This looks identical. So very, very correlated intraday. If it's going to go, pullbacks against ascending moving averages continue to look pretty good. Yeah, AMSC, very nice. Any interest in Netflix? Let me take a peek. Part of the thing with Netflix is it's, kind of a slow mover. If you're okay with that, then, fine. It just reclaimed the 50-day. I don't know. This looks all right. It just doesn't look great. Yeah, exactly what Sean just said. It's kind of stuck in a range. TEM talk of a contract win. Also for Spotify, you'll also notice that Netflix will move with it. These two will kind of move together. And they're both, like I said, they're just stuck in a range. Yep. FCell and Plug are moving as BE sympathy, in particular FCell. Yeah, you know, the only problem with TIGR is that daily price action. If it wasn't such shit price action, I'd be excited about it. But the problem is like when in the last couple of years, and then here's something else to consider, Nikki. Is this really even a name you'd want to own? Like every single Chinese equity gapped up overnight and is now effectively at highs. Isn't this a little concerning? This action that it couldn't gap up overnight and then hold those gains? Yes, it's over the 50, but yes, it's lagging and super hard. And also, like, look at this price action. It's just kind of no fun to sit in. Like, how do you just swing this thing comfortably? I don't see how, right? So for me, when I see action like this, I'm just like, nope, scrap it. What about TME? TME is gorgeous. This is super powerful. Look at the trend on this thing. Once this thing broke out of this base and got above the 200,
Remember taking a look at your
just a
post and balance. You got the
very steady trend. Very steady trend. You had the earnings gap up and then just nonstop, right? Really just above the 20 the entire time. Love that. Nice job on AMSC. Oh, yeah, that shakeout in Palantir was something. Not a big deal because it was a flat trade for me. And I will look to get it re-involved in this thing if we can take out really this little flat pivot. I just needed to take out 912s high, 170, 150s, and I'd be in there. Yeah, Oklo with a hell of a move. Closing flat. Yeah, unbelievable. Shake people out, close flat. Wild. But yeah, no real movement for me today other than get down to a half position in Oklo, lock up a few more gains, get out of a flat position in Palantir, and then get rid of my most recent ads in ARK. Again, had I known ARK was going to bounce like this, you know, with the rest of the market, I wouldn't have cut them. But, you know, I did, and I'm now back down to a $59 cost basis, and I made a couple bucks a share. So ultimately, not a big deal. And yes, what Cookie just said, Tesla is up. The only name I care about, really, because it's my biggest. There's not another name in the market I care about, really. Send this thing to 500. Yeah, Uber actually gave a little 620 setup. I don't know if it's stuck, but yeah, it did give a little 620 setup right in here. And then, you know, a stop would be effectively the 50-day. So there's like not a lot of risk on a setup like this. So I was hopeful that I was going to be able to get more Tesla in. Like I would be comfortable realistically. I probably wouldn't ever tell anybody more than 30%. I wanted to go more. Like I wanted to go 40%. maybe even more. But call it 40%. The thing is I wouldn't have bought that all at once. I would have only added to it as it was working. And if it flags up and gives me another clean setup, I will add more, right? This is one of those names where I see this thing going to 5 and 6 and 700 potentially. So, and I don't want to trim any. I want to trail. So, call me greedy, but this is one of those situations where like you can have a humongous trade, but you have to be patient. You have to have the conviction. And that's just kind of how it is. But really to start, like had I started in my position a little bit earlier around 3:30, I probably would have gotten about 25% of my account into it. I was only able to get about 16% of my account into it, and it's ballooned now, so it's actually more. It's now about almost 18% of my portfolio because of appreciation. So, I would be comfortable with eventually getting this name up to about 25% of my account. And then that's about it, right? It's already, a fairly big position. It's twice the size of PDD. 10% is the hard cap on like a normal position. Like if it's got enough liquidity, about 10% is like my starter size. Like not my starter size, but I consider that a full-sized position. Right? 5% is about half-size positions. And I'm willing to go more aggressive than that. Here's the thing. This isn't one of those, like if it appreciates to more than 25% of the account, it means it's doing the right thing. And I just want to stay with it. This isn't one of those names I want to micromanage. I would rather give back open gains. Right? I would rather give back open gains than to potentially watch a stock that ends up being a leader for the next year, go to 700-800 and then me having trimmed it. This is like Cookie being in BE. Sometimes you just got to grab the bull by the horns, maybe trim a little bit today into an extension and then sit with that sucker and sit with it. Yeah, I haven't been able to add to anything today. And, I don't mind that I wasn't able to, honestly. No, I would advise a newer trader. Here's the thing. You have to go through, by the way, I love the profile pic. You have to go through a few of these cycles, pause and profits, to like really understand when there is an outlier opportunity. And just because there is, doesn't mean you should size it up. So that's like important to recognize. You can't just size up everything, every trade all the time. And under most circumstances, I would tell any newer trader, look, 3 to 5 day push. If you took 15 to 20% of your account on it, because at least you understood it was a strong position or a nice setup and you could limit risk, right? Get it down to something smaller, but always pay yourself and treat it like a business. The reality is I'm going to be fine no matter what, even if Tesla came all the way back, right? So I got to just let it work. But under most circumstances, for a majority of traders, you just want to, trim a little bit into strength and then trail the rest. Bid F is still acting awesome. Yeah, look at this thing go, man. You trim 25% of your 30% portfolio position. There's nothing wrong with that. There's nothing wrong with that at all. Yeah, Oast looks nice, bottom. Hey, quick question since I have you. So that prompt, at the time that I put it, it'll just spit out the thing that the task that I asked it to do. At that hour. So like the one about doing a write-up. Yep. In the tasks. Yep. So like I gave it that prompt, do me the write-up basically, and it'll just spit it out at the time that I asked it for. And bada bing, bada boom. It'll show up to my email. Shouldn't it also show up? I think I send it to all three places: my phone, my email, and the web browser. Oh man, that's amazing. I'm using Perplexity, some AI. That's awesome. Yeah, bottom fishing, very helpful. D-Man, I'd love to talk to you about it sometime too, because if there are things that like a task that can just be done and then spit out every single day, amazing. Unreal. I'm going to fool around with this AI probably for the rest of the day. I got some catching up to do, apparently. Yeah, that would be awesome, D-Man. We'll catch up on it really soon. I appreciate that. Apple explores possible test production of foldable iPhones in Taiwan. Interesting. I don't have one just yet. I just don't want to buy something that's too extended, and Tesla is still far too extended. Like hasn't even touched the 5-day yet. So I'll let you know when it's looking better, but there's nothing here. It's far extended from the 50, still extended from everything. So just going to be patient. And if it just runs away and goes to 500, so be it. But if it gives me an ad opportunity, I will definitely be there to take it, or at least try to take it. Anyway, guys, market closed. Hopefully you guys all had a pretty decent day. Like I said, market shook me out of Palantir, no harm. Effectively a flat trade, and I took home some profits on ARKK. So still not done with that trade. Eventually, when I am finished with it, I will post it for you guys. I could post my Palantir finished trade, but literally it was a completely flat trade, just sitting there as a placeholder, see if it would ever do something, and it never did. So anyway, I will see you guys all bright and early in the morning. And if for whatever reason you guys are having issues with the Discord stream, I'll gladly make a private YouTube one for those of you guys who have issues with Discord. So I have no problem doing that some more. Hopefully that was helpful, Shane. I know you were having issues with the with the voice. So anyway, I will see you guys tomorrow morning. Yep, I'll see you guys. Bye.